Welcome to Market Movers, where we identify market moving headlines and discuss ways to either hedge risk or create exposure to some affected assets. We have Scott Martin. Hey, Scott.
Hi, Jim.
So, okay, in the last 24 hours, we've heard some fairly dire economic predictions from the president, from Mohamed El-Erian, from Howard Marks. Is this fair?
Yeah, it's fair. Where have they been, I guess, is one question. I mean, another thing that I believe is going on is the market has already, I would say, if I could say, Jim, predicted these predictions. I mean, the market had already told us that there were some major issues ahead. And I believe that a lot of the commentary and communication from DC and other experts is just starting to catch up to that.
If this drags on, what assets are going to be the most affected? Gold, 10-year, stocks, even maybe the Russell, because perhaps the market's going to think that some of the medium and small size companies won't have access to the same credit that the bigger ones do. Any thoughts?
Yeah, a lot of thoughts. I mean, good effect and bad effect. So everything's going to be affected. It just depends on which way and which side you're kind of lining up on, right? Bullish or bearish. I believe, though, Jim, as it comes to stimulus, as it comes to getting further into this pandemic, and obviously as a result dealing with it better, I think you're going to see stuff like the Russell and stuff like the NASDAQ and certainly the S&P react more positively to, let's say, what's going on. Gold, on the other hand, could be maybe a little bit more of a negative impact, just from the standpoint of we get further away from this stimulus need, further away from liquidity injections, further away from all the money printing that's going on. So therefore, there's going to be an effect on all those asset classes. Good or bad is yet to be determined.
Okay, credit spreads have, obviously they reflected some of the tension that we saw. Is that a concern to you? And is the 10-year going to zero?
Well, it seems like it wants to go to zero. I think, though, there are some sellers that come in at some points on ZN and push the yields higher, so it keeps it relatively respectable. But yes, I mean, look, credit spreads have been very important to me in watching those through the last several weeks, because if you really look at it, credit spreads were kind of the tip-off to some of the equity pain that we've had. I mean, credit spreads blew out, meaning they got very wide. Nobody was in there providing liquidity until the Fed got in there recently and started cleaning that up a little bit, and those have firmed up now. So I believe that if you look at credit spreads and watch them closely over the next several weeks as we get through another few weeks of this pandemic, that could be the indicator that things are starting to firm up and that we have higher equity prices ahead, because I don't believe that equity prices are going to fully sustain any kind of legitimate rally without credit starting to firm up.
These wild rallies we've seen over the last couple of weeks, just bear market rallies or anything to build a foundation on?
Yeah, they're pretty much bear market rallies. I mean, frankly, you've met a lot of the definitions of bear market rallies on some of these moves. I mean, 100 points in the S&P in a matter of an hour is pretty much a bear market rally. In fact, if you look at some of the stats over the years, you see some of the biggest S&P moves in bear markets. So yes, I believe that sentiment is one thing that's certainly at play there, where there's these washouts, there's the absolute despair and fear that's running wild, and then we see these big rallies. But I will tell you, it's always good to have some of these rallies, though, because it does remind us as traders, as investors, that the markets can go up if they want to. And so as we get more of these, as we get some maybe more firming, and we get some let's say, lows that are supported or defended, that's how you start building your way to a next bull market.
And if it is a next bull market, remind you that CME has the ES contract, both the minis, the micros, and options, actually in ES, NQ, and in the Russell, which I think is interesting here too. Thank you guys for joining us on Market Movers, where we are helping to make you a better trader.